Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on PayPal, ticker PYPL. Just as a heads up, before this video was uploaded, we did upload an analysis on SDC, Smart Direct Club. If you want to see that, it will be uploaded a few hours before this one. Now to get straight into PayPal, as always we will go onto a clean daily chart so we can see is there any gaps that need to be filled, because more likely than not gaps are going to get filled. And the key ones that kind of stand out is this one. We will still be looking for that fill at 221 and 230 or at 229 is going to be that key gap fill that we are more looking towards. Also, you could consider this 250 a gap fill, something I'm not really going to mark off because I prefer those very obvious gaps. For example, here you can see the candle didn't touch it the next day, so quite clearly seen, and especially this 231, a very clear gap. This one is considered a gap because we never came back to retest that level, but it's not as clear to all traders and investors, so I don't like to trade those ones as much. But for right now, those are going to be those two key levels that we're looking at from the gap fill side of things. Now we'll go over to the standard deviation chart so we can see where is the standard deviation is telling us where it's low risk, which is kind of where we are now. So you will see, going onto the daily chart, which is on the right, around 178 is where you got the third deviation on the daily chart. So when a stock comes into here, you expect this, especially on a large cap stock, to be the absolute bottom. You expect it to bounce coming into this level, but on the 4 hour you do see that the third deviation is a bit lower, so that does mean we could see PayPal creep that bit lower, but we don't personally see PayPal going below that 160 level, at least for the time being. Obviously deviations move over time, so if the deviations come down then we would update that, but for the time being we don't really see PayPal going below 160. But where we are now, 178, or where we were before today, 178 was considered a low risk, and it's personally something I got into myself. Was posted in the Discord as well if you were in there. But if it does continue lower, we would definitely be looking to get some size in at 160. So if you were long now, which would be considered low risk, we will now go over target. So we did actually hit our first target today, which would have been 190. So if you were looking more, and we'll change this to a kind of 5-day, 5-minute chart, but if you were looking for a intraday trade or a day trade, this would have been the trade we would have been looking for, coming down to this 178 and taking profits around the 188, 189 level. And if you for any reason got the exact bottom to the exact top, that would have provided about a 5.5% win in just the day trade alone. But something we are looking to actually trade a bit longer term. So yes, it's a level we use just to make sure it can break over, so that's something we'll be looking out for tomorrow. We'll just be making sure that PayPal can kind of come into this level, break above this 189 level, come back, probably retest it, and we would hope to see it push higher. And then we would be going into our next level, which is at 205. Again, we would want to see the same thing. PayPal come into that 205 level, break a bit above it, come back, retest, and then hopefully continue higher. That's usually what we consider confirmation on these levels. If it can break through, come back, retest our support, and then continue high. If it can break that previous high, then we consider that the confirmation that the level has been valid and it can continue higher. Then 217, this is when we're going to start looking to lock in profits if you're looking for longer term swings and or investments. This 217 level, definitely we'll change this back to a daily so it's a bit cleaner. Definitely a level we'll start looking to lock in profits, because you're coming to the to this gap fill here, and you're also lining up with the previous gap fill over here. So coming into this level, you got kind of two gap fills and a standard deviation, so it's highly likely that we will get a pullback off this level. So definitely an area we'll be looking to lock in some profits, if not the majority of it. But I will be waiting for that push a bit higher to get out of the trade completely, and I would be looking to get out of the trade completely around 229. The reason for that is that it's a gap fill and lines up very closely with our first deviation on the daily at 232. Now that's if we're looking at a swing trade. Obviously, if you're looking for an investment, you're looking for further targets. And if not, you may not be selling at all, but if you're looking for targets to be getting out, so you may be looking to hold for a few months, then the key targets we'll be looking at is around 244 to around 260. And why do we have these levels for an investment and not going up to, say, the first deviation or something like that? The reason for that is the round 245 to 260 is we're coming into statistical mean. When a stock comes into a statistical mean, we then have no clue on where it's going to be going from there. It could easily go up, could easily go down. Whereas, for example, with PayPal now, where it is, we have a lot higher chance that the stock will bounce and push towards that statistical mean, so it makes sense to us to be getting long. Once the stock's in statistical mean, yes, it's an investment, so you can hold for it for a longer time, you can wait for it to go higher. But if you're looking to get out of the trade kind of at an optimal time, we would call it, the statistical mean would be that, because when it comes into here, could push up, but it could quite easily push down. We have no insight into what will happen, and it'll probably be much more down to a news catalyst. So if some good earnings or they release a good headline, then we'll probably continue higher. But if something comes out about the company, it could quite easily go down. That's why statistical mean is where we usually don't hold past, because from then it's just unnecessary risk, and it can just mean we're going to be in the trade for a lot longer than needed, when there is going to be a better opportunity to take on another large cap stock or even a small cap stock, depending on what you're looking at. So hope you enjoyed the breakdown on PayPal. Hope to see you in the next one, and that's it. Peace.